The largest options expiration ever. Yes, guys, we're about to see $6.6 trillion of expiration. But it brings us to the question of what are Wall Street doing? Can we see some new activity? Well, as it turns out, in today's video, we'll be taking a look at the dark pool prints, the largest and biggest traders and what they're thinking about these markets, and of course, the VIX spiking back above 20. What does it mean in terms of the data? That and more coming up in today's show as we uncover what's going on in Tesla and, of course, the liquidations in the crypto markets. It looks like over 300,000 accounts just got absolutely smashed. Stocks, commodities, and cryptos, this one is not to be missed. See you in a moment. Well, welcome back, everybody, to The Daily Show. My name's Tom, and we have a lot to discuss today because, of course, we've got the biggest data, the flows, and the liquidations. Let's begin with what just happened to many retail traders out there over the last 24 hours and 48 hours. Hopefully, it wasn't one of you. We've discussed this quite a lot. As we approach these kind of FOMO levels, often people were over-leveraging. Let's now take a look at what happened. Over $1 billion, coupled by another $1 billion+ the day before, got wiped off in terms of retail traders' accounts. We almost saw 302,000 traders liquidated. And of course, the biggest positions were in Ethereum. This will probably come as no surprise as a couple of key supports were taken, which we'll look at later on today's video. But let's go back over to IBKR's founder and chairman mentioning that, of course, stocks were seeing too much leverage in them over the last 3 months in particular. And as we know, spikes since November were massive in these markets. Should this be a time that we panic? Well, we've got some great data coming up very soon. But let's just quickly look at this comment once again. He hopes that they will not come down too fast so we can liquidate as it happens, as we will not end up holding the bag from people that are unable to meet their margin calls. So, of course, with margin calls, the way it works is you'll get a call, you'll be able to say, look, we need you to fund it now, or we're going to close your position. And of course, that can actually have an impact into price action on the charts, the way we actually look at the flows and the movements. Now, we know that we've probably seen a lot of people liquidated. Now, the question is how many of them are in margin and how many of them are going to be closed out into this OPEX account or this OPEX time here in December, the big options expiration. Well, let's go and have a look at the VIX firstly. Yesterday was the second largest spike ever recorded and only coupled by February 18. Now, interestingly enough, February 18 was the same year we ended up going into a trade war and obviously saw that December go absolutely wild. But did it recover from this particular spike over here? Well, of course, each time is different, but yes, that one actually saw 6 months of gains in the market. As you're about to find out, we have some data that actually shows that things could be looking better very soon. Let's firstly take a look at the VIX and get past the news, get past the scariness, and actually ask ourselves the question, have we seen a spike across the board in all VIX contracts? Here is the January contract, and of course, you can also see the VIX currently the last price. And what you'll notice is that the VIX spiked up. Yes, we saw a movement in the front VIX, but we didn't see an absolute bedlam kind of move across the board. And that's suggesting that where this volatility is right now is just in the here and the now and not actually systemic in the market where the market's freaking out 1, 2, 3, or even 6 months in advance. Now, this really breaks down most of the stats. If we look here at Jason Gopfert's basically data on it, wherever we see a rate of change, that is the market goes up so quickly here on the VIX, over 100% or 50% in one single session, that when we do get these types of reads, if we look at 1 month, 6 months, and 1 year later, generally speaking, the VIX will actually be down. In fact, 1 month later, what we always saw 100% of the time in these reads was the VIX was lower. And as it'll turn out in a moment, the S&P 500 was doing something, of course, you may be able to probably bring together. Let's go to rate of change again for the VIX, though. When we get these types of big rate changes here from Seth Golden, you can see these are the reads from 2010, 7 previous times. 2010, 2011, 2015, 18 twice. Remember that first one in February, big spike there that was concerned. And then, of course, we had 2020 and 2024 twice so far. Whenever we've seen this, every single time the S&P 500 has been higher 6 months and 12 months in advance. So basically, we usually do not see the markets actually freak out from these one-day spike events for the medium term. Now, there are some other concerns. People, of course, are bringing up breadth. Consecutive days, S&P 500 has more decliners than advances. Bring this to now, I believe, 14, which is an incredible number when you're talking about how many stocks are actually failing underneath. What it also shows you is that some of the stocks are finding some buying pressure, notably semiconductors, which we'll look at very soon. But this chart here, I think, from Bespoke is really good. What it shows us is a bit of a highlight of the markets right now. AD line, we know it's been declining for a while. That's obviously dropped off a cliff. 10-day advanced decline line is absolutely oversold massively. 50-day and 200-day moving average percentage stocks is falling off a cliff. And all of these things have us wondering, is this a bit of a flash failure? And of course, therefore, an opportunity. Here are, from 24 hours ago, the percentage of stocks above the 5-day, 20-day, and 50. And we'll look at this in more detail soon. But as you guys know, we tend to look at that as a bullish paradigm in markets. Usually when you see these kind of massive sell-offs, you've got to ask yourself, did everything just flash sell? Is it now oversold? Can we now find buying pressure? Well, if we look at stats again, when the VIX just basically moves above those huge moves over a one-day change, these big moves in terms of one-day change percentage. If we then look at 5 days later, so of course this takes us into Christmas rally. Now, a lot of people say, well, the Christmas rally is cancelled. It's meant to have already started. Oh, no Christmas rally. Actually, if we do end up using the stats for a real Christmas rally, which is Christmas, after Christmas to the beginning of January, I think you'll find out this market may be bullish. Now, why is that? Because S&P 500 forward returns over a 5-day average here, when we see similar situations with VIX structure, actually ends up being generally positive. 1 month later, it is 100% of the time in similar reads, yes, we don't have too much data, up over that period. So, of course, we have to look at this as, have we seen this before? Again, if we go back and we take a look at all of these huge flash sells where everything falls below the moving averages, as this was taken by someone in our private community, links in the description down below, you can see here that these particular areas often did culminate in a quick base. Now, it didn't mean it was the absolute low. It just meant that if you went and looked at it over a 2-week to 1 month period, you were generally finding low zones. And this has been happening since the October 22 bull market began. So basically, it's been happening every single time we've seen it so far. Now, let's have a look at some of the experts out there and what they believe. Of course, we're looking at the data, so I'm sure they're looking at the data as well. Now, Tom Lee came out Wednesday, December 18th. Now, admittedly, this was during the crash itself. And of course, he's a pretty big bull. So he said, equity overreacting to the downside. See 30-minute RSIs oversold. Yeah, remember, RSIs and everything else can remain oversold for longer than you expect. This is where we expect a rally to start, and I would advise strongly to buy the dip. So, of course, he basically is a believer of buying the dip. Are you buying the dip right now? Let us know in the comments down below. Or are you just shorting this market and you're like, you know what? This is going to be a 10% sell-off. You guys are suckers. We're getting out of it. Let's have a look here at Yardeni as well. He tends to agree with most of the big reads. Remember, we still think that next year we can get to 68.50 on the markets. That's at least what we think. Yardeni believes that we're going to hit 7,000 next year. And he also believes, very interestingly here, and remember, it's a data guy, generally speaking, a 10% stock correction will happen. Yes, it's because we're due one. We've talked about this now for a while. I suspected we'd see it in the first quarter of 2025. Could it be right now? Doesn't seem likely it's going to happen right now, but you cannot discount it. You can't say it won't be there. NASDAQ, of course, most people calling for much higher numbers. So let's go over and have a look at the NASDAQ stat. It is now up. So basically 3 trading sessions before Christmas. So that's technically Friday, which is the OPEX day. That is technically Monday and Tuesday, because I believe the market is open half of the day on Tuesday, Christmas Eve. If you bought the the NASDAQ at this period, and you were to run it until 8 days after Santa has come, so that is Christmas Day, we would be looking at generally a 28-5 win rate. So that is 28 up, 5 down over that period of time. That's a pretty good stat. I still think Santa could come to the markets, and of course, it does look like that stat may play out. We'll talk about that more when we look at these options moves in a second. US daily, just in terms of the FOMC cap, in terms of what we've been seeing, the FOMC paired 25 basis point cats. Obviously here, whenever you look at these particular risks, we're not too concerned. You can pause the video here if you want to read that one, but that's from Goldman Sachs, I believe. Let's move over to Bitcoin. Bitcoin's still technically in a bullish run, obviously still holding up against its lows. Yes, it's a dull market. Yes, it's sold more. We know liquidations have gone on. And when people get liquidated, it tends to, of course, find buyers of the biggest players. So liquidations are very important to consider in 2025 as we see more people take leverage. Speaking of liquidations, let's now go to the dark pool liquidity. Basically speaking, we saw big dark pool sweeps and moves just before this flash sell. Now, we had been talking about it. A few of you out there had been eagle-eyed and decided to go with some options. Well done to you. Obviously, the market has now fallen, about 4 and a bit percent. Now, if we go and have a look at what happened over the last session, though, and especially just at the close the previous day, we now have the data. Yes, they may have sold up here, but it looks like someone has been buying back in. Big trades. Now, this doesn't mean it's the low, but this is very important for us to create structure. So these are huge trades coming into one of the most popular S&P 500 ETFs, and these are big ones. Have a look how many transactions are going through. Someone likes the level. It's most likely a buy. We don't know that yet. Of course, we haven't seen it regain, but take a look at that. Transaction after transaction after transaction. I would guess a lot of these are even possibly liquidations, who knows, and countering it. But that is a big move. And it's not just there. We're also seeing TQQQ support the same area that we once saw show us huge trades. The number one trade over the last 2 years, and then it led to the way up. So what is this? It's defense. And effectively, the market is playing some defense on one of the most important support zones. So we'll look at how that could play in a moment. But it keeps getting wilder. KRE, of course, regional banks, big transaction just going through. Yeah, not the hugest one ever, but a big one none the same. So a lot of maybe buys coming into the markets, and that's showing us at least some temporary buying structure coming through. Treasuries was also seeing some buys here, or at least a position, 16th largest position. We now can pretty much say that if Treasuries is able to regain this and make a higher high, that's going to be a great sign for Treasuries. You can probably mark 91 on the charts in the future and look towards that. Of course, we will be doing so make sure to subscribe because we'll cover Treasuries when things like that do occur. Of course, we did see the largest transaction ever recorded on the VanEck Ethereum ETF just before this crash. We suspected, well, we didn't know which way it was. Turns out it was a sell, of course. But why this is important is because now we're coming back down to around that 45 area. So where did we see a large buy? Around the 45 area. Remember, we talk a lot about on this channel synchronization of markets. It looks like quite a few markets are starting to sync together, including semiconductors, which are still finding generally good buy pressure. And we even before this crash talked about how Nvidia looked like it had something in it. And so far, it actually hasn't even worn any further losses. Have a look at this. Semiconductors over the last 5 days, the best sector of the majors. What's the worst? Well, yeah, you would have guessed it. Home builders absolutely getting destroyed. KRE also getting destroyed. That's regional banks. But they have found buyers. So, of course, well, we think they have. Dark pool activity was there. So now let's move over to the charts. Before we go to the options flow, let's take a look here. What are the possibilities? Well, of course, this is a good support, but we cannot discount the fact that it is closed now twice on this low, and it rejected that 5,900 plus level, which we saw in the previous session had tons of puts on it. So what may happen? We may fill the gap. Now, this is a gap left by the November elections, and basically this will wipe off everything that was put on around the elections and just before it, 57.82. If we are able to get as low as 56.85, I would not suspect the market can get under 56. So I think that that's probably the base case for now. The gap is certainly very possible, but it comes back to structure. So let's have a look at the structure. First up, rejection over here. That was actually the options high for the day. It went up to the options high and then went bang down. This is now oversold. It is absolutely oversold. So what we're looking for is a bid. We know there's dark pool activity. So what does that tell us? Wall Street is big time doing something here. Why? It's a hugely traded, like this zone is massive. And you're going to see on the Russell 2000, you're going to see it on the S&P, just huge transactions go through. Let's have a look at the S&P here. There's the rejection. There's the options high. There's the 50-day moving average, obviously something that has found buying pressure before. Here's, it's not really an ascending, I wouldn't usually that. So Here's the kind of gap fill that's coming down to this level here. But notice that we now have this rejection. So what we're able to do is we can go in here and we can say, are we about to make a new lower low? The answer is yes. We suspect this is fine. In fact, this is probably what needs to happen. We take the lower low. The people that bought the dip over here will get scared, okay? Now, if the market then rallies off that and breaks above 59.26, I think that's a bit of a go sign that the market is bullish, okay? The market is ready to go back on the bull run. And that's because we've seen Wall Street with large positions floating around this level. So it's like they're reclaiming that zone and they're saying, you know what? Yes, we are buyers. They don't have stop losses like most people do. They just buy in position-based trading. So effectively for them, they're buying or they're doing something. If the market then reclaims and goes in the direction, we can then say, okay, that move is now being seen. We've now seen it. Most people don't see this, but of course you guys do, we do. And that would be a very, very important level. So I'm extremely interested in what's happening here in the US 500. I'm sure a lot of you guys are. This will dictate probably what's going to happen over the Christmas break. It will dictate whether we're going to get a Santa rally, and we may see it in less than 24 hours in terms of how these moves could get quite wild. So if we see a buy into the weekend, we're going to have to like that. Let's have a look now at the options. Negative gamma across the board. So obviously, yes, the bears are in control of this market at this stage. We do know that there are tons of 5,900 calls that were opened. So that buy the dip philosophy that people have is pretty strong. But take a look here at next week before Christmas. Wow. That's a sea of red. We haven't seen one of those in a while. Whoa, that's a lot of options. And it still seems like people are stacking into January puts at 5,900. So tons of options on the Monday. Could it be that the market doesn't want to pay those out and they're going to act as put walls? Of course, if the market stays down, all of these feed upon themselves. And what that means is a lot of them will probably need to be hedged off. That will cause further cascade. And then, of course, we'll be looking for that gap fill. So it's going to come down to patience, react, don't predict. If you're a dip buyer, positioner, an investor, you could certainly make a case for this level. Hey, we've seen Wall Street do something around this zone. But of course, we don't know that Wall Street wants to go bullish yet. We suspect there's a lot of puts down here all the way through. You can see here in February, just puts across the board. But that's probably around for inauguration hedging, to be honest. But if we look over here, we've got this 5,930. We've got a huge 5,800 put as well for Monday. So there's a lot of stuff going on. We will update on the weekend once we get that. What about Tesla? Well, Tesla obviously struggled with 440. We've now seen huge dark pool trades come through. I would kind of think that Tesla might have seen a seller. So we know that we were aiming for 500. I mentioned 495 or something like that would be a great take profit. Got 489. If you'd been take profiting along the way, I think that's fantastic. Right now, could Tesla fall further? Yes, it's given us what we would call a sideways to down market read. I wouldn't suspect Tesla to be able to smash 500 anytime soon, even with the positive gamma. But look here at those options. There's just so many sitting there. And of course, sentiment has now completely switched. Let's move over to NVIDIA. NVIDIA 135 still is a big call wall to 140, to 148, to 150. Obviously, we still see 130, 125 as major kind of put walls. So NVIDIA is kind of holding up the market. This could be the most important chart right now, other than the S&P 500 when it comes to market sentiment. All right, so just before we jump into the charts and we take a look at all of the key things that we need to be watching right now, I just want to say a big thank you to the sponsor of today's video, which is obviously Tiger Brokers. Now, Tiger's been working with us in 2024 to bring you guys the best service, but on top of that, to bring you some special deals. If you're from Australia, check out the links in the description down below because they're offering now a new promotion. $60 in cash vouchers, $20 extra on top, so you're getting even more because you guys watch FX Evolution, and 4 times zero brokerage trades and 0 FX fees. So you can get those sweet US dollars even cheaper than before. And that only takes $2,000 to be put in your account. Now, guess what? It's 4 zero trades and 0 FX fees for exchanging up to $2,000 every month. So if you're looking at getting into the markets, you should be looking at potentially Tiger Brokers and checking them out down below. Why is that also? Have a look at the comparisons here in costs for Australians out there. If you're wanting to buy, especially ASX stocks, look at that. Wow, the current promotion's cheap. America is ridiculously cheap in FX fees as well. And 9,500 stocks now and counting when it comes to 24 by 5 with Tiger Trade. So remember, these markets are now trading all the time. You've got to have access to the 24 by 5 markets, and you can do that in the US, and 9,500 stocks now included, including some of the best ETFs. So what are you waiting for? Even if you're not from Australia, check out the links in the description down below, and why don't you see if Tiger Brokers is right for you? All right, guys, let's jump into the charts now and check out US 10Y. Now, this is, of course, a concern. We've seen a 10-year bounce in terms of overall yields. If we go to the 2-year, you can see here it didn't spike anywhere near as much. So I'm not super terrified of this. This probably comes off the back trajectory of really the GDP looking so strong and therefore getting less rate cuts. We spoke about it in our previous video if you're interested in watching that. Now, from there, we're really more probably interested in what's going on here when it comes to stocks above or below their moving averages. So the 20 moving average is, of course, at a historic general dip buying zone. Let's take a look at the 50. So the 50 moving average, you can see here again, getting close to historic lows. These are the lows. Look at this. This is the August low. This is the April low. This is the first low here in October. This is the second low. Now, they went down more. So if you'd bought here, so let's say we'd bought the same level. Let's bring that one up here, yeah? And you can see that even if you'd bought here, you still got some reprieve. Let's have a look at when it hit over here. A few days later, we still got some reprieve. And in fact, even though we went lower, we ended up in a bull buy. So the 50-day, the percentage of stocks under the 50 is also quite oversold. The data stats don't lie, and these, of course, indicators, yeah, they're coming off different levels, but still very interesting. Percentage on the 200, so stocks above the 200, again, getting down to those tasty levels that we haven't seen since September, we haven't seen since the August dip, or of course, the more notable, this was a really random one where we saw a really low breadth during June. But the other one over here, which was the sell of April, again, buy traditionally. Have we seen lower before? Yes. So we need to remember we could go into a protracted one. So what happened? This is actually probably the most interesting one. This was where we got that 50 read before. We got a small dip buy. Then we continued on down to a protracted sell where we saw the percentage of stocks above the 200 dip massively. So at this stage, it's kind of like, where would you expect a bit of relief? Around here, give or take 50 to 100 points on the S&P. And obviously we know if we see bid, we've got the big trades coming through. Consumer discretionary versus staples still looks okay on the charts. US dollar obviously is blitzing. This kind of makes us think that if the weekly does close above here, we're probably moving to 110. That may put further pressure on the downwards market. It also could put further pressure on yields, which also could go to bonds as well. A lot of people been going on about high yield junk because, of course, if we look at high yield junk, it dropped off massively over the last 24, 48 hours. I'm not too concerned about this as long as it stays above these 76 levels. So, I've got other ways of reading bonds. I wouldn't say the bonds market is totally freaking out at this stage. Home builders obviously is more of a concern on the 6-12 month outlook, which we'll be watching into 2025. Let's move over to gold. No big moves here. Obviously, would like to see it reclaim above. I like it above 26.65. I think that's when it's going to get bullish again. So at the moment, I'd say neutral bullish because, of course, we've got that longer term outcome. Silver, on the other hand, we have been cautioning here. We've been looking for 31.5. We just don't see it yet. And this is starting to look a little bit nasty. I could see it going back to 28. So am I still holding some positions in silver for a 12 to 18 month outlook? Yes. Is this ideal for trading? No way, not unless you're short. So there is nothing holding silver up. There is no sink here yet. We haven't seen buyers come in. If anything, it looks worse. So yeah, we'll have to revisit this. If you're a buyer in silver, you really need it to reclaim back above 31.15. And it's just kind of looking terrible at this stage. So we'll see how it ends up playing. US oil, flatlining. So of course, we've got this market here in oil, just kind of flatlining through the middle of nowhere. Still looking at possibility of oil being a little bit more bullish than bearish in terms of price action. But as I've told you guys, very tough in the geopolitical environment right now. Tesla did give us some indications it's probably overbought. This is a big sell. So if we take the high to the low point 14, it's getting close to where I would usually call it and say, you know what, this thing's going to just chill for 1 to 3 months. That was an epic run post-election. 489. If you guys took a little bit of profit, I wouldn't have blamed you. It's almost 200 forward PE at these levels. So yeah, that's one standard deviation too much. And at this stage, we're looking for further price action. We'll come back to the options as they stabilize. MSTR, I would expect this to probably find a buy around here. It's a fairly decent support line for it. It's of course suffered. Not surprising to me that it would have suffered. This level here was the first buy. It bounced up. This level here would be the second area to find interest. So I wouldn't be surprised at all to see MSTR get a little bit of a reprieve at these areas. Semiconductors have fallen, but still held pretty well. Still looking at this as being a potential bullish sector. So we'll continue to watch probably most closely NVIDIA, because NVIDIA's RSI is very low. And when we've seen this RSI low like this, we've generally seen buyers. A lot of people, of course, calling the head and shoulders, which, you know, relatively speaking, is so far in profit if you've been shorting from this level. And of course, we know that if we can reclaim above 140, I think it's going to start a squeeze. And that's the squeeze to the upside after liquidating many people. So are we oversold? Yes. Have we seen a lot of kind of equilibrium here for the NVIDIA trade? Yes. And where is the downside protection around 116 at this stage? Hong Kong 50 doing Hong Kong things, totally different. The Chinese market looking a lot better. Of course, I am kind of excited now to see if this can break 20K. If it can, could be a really good trade on there. Couple of good stock movements as well in some of the better Hong Kong stocks. Let's move over to US 2K, looking for a 2265-ish break high for the Russell. It's a great zone, very heavily traded zone. Probably a couple of big transactions went through. Unless we reclaim the zone. Remember, buy the V, don't buy the dip unless you know what you're doing. So in this case, have we got a V? No. Have we got any kind of recovery? No. We just know there's large trades on the S&P. And most likely, we know also the TradeUP, but most likely the Russell as well. NASDAQ coming down to kind of the first support level. Again, TradeUP did find a little bit of buying pressure. It's obviously fallen off after finding recovery. We do need to see bid. And if I was setting an alert, I'd go above this high here of the previous session, which is 21.4. So that'll line up pretty well with US 500. Ethereum versus Bitcoin, not looking so good, is it? Ethereum falling against Bitcoin over the last 24 hours again. Still holding a little bit better in terms of performance versus Bitcoin to when we first set it. But yeah, we know that this is the turn point, I believe, for alts in 2025. I think we'll still get there. At this stage, like to see a bid. We really want to see Ethereum bid against Bitcoin now. We've seen liquidations. We know what they were. Second support line hit for Ethereum. We've always said the base case here is that we could go down to 3,000 and tip it and then still spike up. This is crypto. If you don't expect 30% potential wipe-offs, and right now we've seen 18.7, then you can't be in crypto. It's just how it is. These markets get wiped 30% like butter. It's smooth as butter. They just absolutely get smashed. So a lot of people will now be calling this a double top. I'm not going to go negative on it. As you guys know, I am positive on Ethereum over the next couple of months. And I still like this demand level. So good little bid here. Double top. It's still technically against the overall trend. Yes, we've kind of changed to, well, we actually haven't. We're kind of just holding on to the trend. So this one's just holding on to the trend. But as always, I don't so much look at Ethereum's trend. I want to look at Bitcoin's. Has Bitcoin actually shown us, wow, this thing's dead? The answer is quite simply no, it's not dead. It's still dull. It's still a series of higher highs and higher lows. And even though it went underneath this level, which is the daily 20, this is still an incredible support. Now, if it got underneath 88, would I be a little bit more concerned? Yes, I would. So at this stage, Bitcoin, of course, we need to watch it. We need to follow it. We need to be like hawks. But a lot of people got liquidated. And I would think that we're probably going to find some buy pressure over the next couple of thousand here with Bitcoin as well. Big news is still coming. OPEX, big options expiration, obviously trillions of dollars at stake. Usually with OPEX, we tend to see the bigger move on the day before, but you never can tell. So usually that would be this today, the day of this recording, Thursday. Core PCE, one of the key lead metrics for the Fed, is about to come out. So we'll find out what goes on there. As always, if you want to follow us and, of course, subscribe, make sure to do so in the comments down below. And check out the sponsor of today's video as well, which is Tiger Broke, especially if you're from Australia and you want to get involved in these markets. It's a pretty exciting time, also a little bit terrifying, but for some people, but of course, we'll be there throughout 2025 making these daily videos so you guys are better informed. I want to say thank you so much for watching today. Obviously, I hope you enjoyed it. And in summary, I guess, we're not terrified based on at least the data and the flows yet. If the bonds markets start to freak us out, then of course we'll let you guys know. Home builders is a concern leading into 2025, but we continue to see the American consumer reads and other leads that we use still holding up. Breadth sucks, let's be real. And everyone has a case to be made there. Remember, there's always a case for the bulls and there's a case for the bears. It's the question of which is the strongest one. For now, we still think it's probably the bulls into early 25. Thank you so much for watching. Bye for now, guys.